Welcome to tonight's Nightly Market Intelligence Report. Tonight is September 22nd, 2013. The time is 7:12 p.m. and we have a special alert, a special U.S. market alert on tonight's report. Probably the most important thing that we can report to our worldwide subscribers tonight is that we have gone from a strength of a market, a smart money bias market trading call at a level 9 last week, now down to a market net neutral. We are now officially at a smart money bias market trading call at a net neutral position. And the reason why this has happened is because of the brand new smart money that has come in just on Friday's session. Most of that recorded volume had come in at or near market close on Friday to propel the prices down, steadily down here, and then a rush for the close at 15,451.09. This is an official establishment of a brand new pivot point high. A 3-day pattern, 1, 2, 3 right here, in isolation, is a setup for a downward move, and this is exactly what is setting up on the U.S. markets right now. The sell-off here from the smart money surely has clear levels laid out to the downside that were broadcasted out on the way up, as we're going to use one more time to hit these price profit targets on the downside as the market will continue to move down. These levels right here, the most significant resistance level, which remains resistance today because we never got 3 closes above here, is 15,608.44. Support levels, brand new for tonight's report, are 15,503.15 right here, next to the downside by the union of these bars, 15,381.36, 15,312, and respectively 15,194.13. Again, brand new, historically recorded volume that has come in on the Dow to prove the smart money has made its move. Let's take a look at the money flow indicators, a relative comparison of the money flow indicators to the volume. Here we are in a situation where we have the Chaikin money flow, which had a very strong negative divergence, which was just formed at the pivot point high. Again, in isolation, set up for the downside. In isolation, a lot of pent-up selling pressure that has not yet taken place in the form of the prices as they will continue to move to the downside. Very, very strong negative divergence here at the Chaikin money flow. Here, right up and right back down on the overbought territory from the Stochastics Momentum Index. Strong negative divergence here as compared to the prices. And as we move forward here, a very steep but valid trendline violation from the money flow index, proving out one more confirmation in isolation, along with the trend line connected by the prices here, that a market turning point is now in play. And here, look at the complete fall off to the downside from the advanced decline oscillator. The amount of shares that declined versus advanced in the last 2 trading sessions is nothing short of incredible. Obviously, none of that appears in the most recent past 9 months. MACD is wide, but as the market continues to trade down, this will tighten up here, and the EMAs, what should cross for the next few days as well. So, getting back to the levels here for everyone to take a look at, and again, net neutral, set up for the short side. The play is short in process right now. Okay, these are the levels, the absolute levels on the market to be recording for the upcoming trading week. And what a week it is going to be. Let's take a look right now at the next set of data that we need to cover. And we're going to talk about this right now. The amount of points, the accumulated points on the S&P 1500 sectors and the ETF symbols that are traded against them that we follow every single night here is incredible. Let's take a look and see exactly what happened here. On 40 financials, we were in here on the report back on 9/9/2013. We got out. And across the board, picked up a lot of points here. Let's take a look at the next example. Here, out again, Friday's session. In here, out here, a lot of accumulated points. And here, out here, 25 consumer discretionary, and the ETF symbol XLY, and on, 35 healthcare and XLV out here after being in way back here on the 4th on an early in. What an excellent trade as produced by our smart money trading methodology, as administered, as taught here by the InsideTechnician.com. Here, no call on 55 utilities and XLU, and again, on 45 info and XLK, we have no new call here again tonight. The volatility is too high. And here, 30 consumer staples and XLP, we got out right here too on Friday. Everything was gotten out of on Friday. High possibilities, high probabilities of getting in on Monday to be short. We're waiting to see how the overnight future session pans out, and we'll be able to make a better determination about that as soon as the equities market opens or within the first half hour. 30 consumer staples again, and the ETF symbol XLP out with another substantial gain. We'll have all the accumulated points recorded for tomorrow night's nightly market intelligence report. And here, 50 materials out here with a small gain. 50 telecom right here out with a nice gain from here to here. The stop was in place. On Thursday's report, there it was, long with a stop in place. Everything was fully recorded. 20 industrials that ended up, look at the run after being in right here on the 5th. Excellent in, getting out on Friday's session. For those of you that missed Thursday night's report and what I had to say at the end, it's already uploaded to YouTube. And this is exactly what was said at the end of the report after this recorded trade was broadcasted out. Here it is. Net gain times $50 for every full point move in this market is an $87.50 net gain per contract. Times 30 contracts traded, running some good lunch money for 2006. 25 net dollar gain on the trade. Booked. That covers tonight's nightly market intelligence report. Tomorrow, if prices decide to slam down, I can assure you that the stops that are placed across the board on the sectors and the ETFs traded against them will ring out loud and clear. And I have no problem with taking everything across the board off. See you Sunday on the next report. Good night. There you have it, the actual proof. And we aspire to do this whenever we can because it's important for everybody to understand how important it is for us to give you the information in a fully transparent environment, which to my knowledge, very, very few and far in between in this business are willing to put themselves out far enough to be able to do. Okay, let's talk about the next matter we have to cover here on the futures. And you'll see how, in this case, for the near month, on the December of 2013, we have a situation here where we have the level set up as well, again at net neutral for those of you that are forwarding out here tonight. These are the levels. The new open session on the overnight is open, and we're trading mark to the market 1703.50 right here. The resistance level right here from the third all-time high, 1, 2, 3, stands at 1718.50. Here's Friday's session. Here's the new overnight open session, open and trading down again. The support level being used as a price profit target to the downside is 1699.25, respectively 1689, and then again here, closing the gap and getting below that to 1678.25. Again, for those of you that have fast forwarded, we are in a market net neutral situation on the bias call on the market side with a high probability market setup move to the downside. Looking at the indicators, checking money flow, strong negative divergence as well. Here, EMAs are just now flat ahead of the equities, leading. The MACD is in a more advanced formation. This negative divergence will be complete if this peak trades down within this overnight session to go ahead and make another relative comparison of the difference between the prices here, a higher price and a higher and lower indicator level in a more advanced stage right now. Here, more advanced stage on the stochastics momentum index, more negativity. And here, on the money flow index side, a negative divergence was established and now moving to the downside. There you have the levels for the upcoming week's trading. A lot of excellent price profit targets set up to extrapolate over into real time. Now, as we take a look at real time and we take a look at the levels that are available to trade as a market sells off in this fashion like it did on Friday, we're going to do something different tonight. I'm going to show you these levels and how we stair-step them down. This was a level that was established right here on a 1-minute chart. Here's another, here's another, here's another, and here's another that may or may not get broken to the downside, but this is officially the next level right here of support to the downside, laid out in the strong neighborhood of 1701.50 right there to the downside for prices to cross through again or find as support, and then possibly trade up and continue a market at neutral situation until that equities volume plays itself out. The only way that this could turn out any different is if this is a glorified dump and then pump back in for a short-term market correction to take some of the profits out that people have made and turn right back around and take off. But right now, the evidence is very clear right now on today's report on September 22nd, 2013, that this is a market sell-off in the makings. As we look at the 15-minute indicators, you'll see here this was the major level that needed to be crossed, violated here, and then finally. And this is exactly where prices started to sell off sharply and all the way down to where they are now at 1703.75 mark to the market. 1713.75 was the level. Look at the setup. Beautiful here. Stochastics fires. And again here, volume comes in. The blow off to the upside, prices turn right back around to get through 1713.75. And here we are again. A great setup, very strong negative divergence out of the stochastics momentum index. And we could draw that in at real time. We have enough time to do this tonight. Right here. As compared to this blow off. Turning right back around, trending down, never look back. Getting through 1713.75 with a lot of strength to the downside. This is what I want everyone to see tonight. Not a lot of time to go into this, but the pump and the dump. The dump is so much greater than this move up, and just a matter of time before prices slam down. It was evident from our smart money methodology that this was going to happen. There was a slew of trades that were made all the way down the line here across the globe from everyone who has studied here and who now trades for a living. There's the cross on the EMAs at 1713.75. Here's more dump here out of the money flow, and again, negative momentum to the downside before that level's ever hit at 1713.75. There you have all the levels. And the most important level here, as we discussed earlier, we have a big week ahead, a very big week ahead. And we have an opportunity to pick up the lion's share of money in a short period of time. I'm ready. You're ready. Let's tell the world about this report. Tell everyone that you know who could benefit from something like this that you've seen actual proof of, so we can help them to become real-life profitable traders as well. Jeff Killian for the Inside Technician. My pleasure to present to everyone tonight, and we'll see you again tomorrow night on the next report.